Hey, this is Sebastian with Day Trade Today, and today we're going to be talking about risk management and how to figure out how many shares you should buy before you get into a trade.
Shut up and sit down.
So let's get right into it. The first step is figuring out what your risk is, and that's easily done by figuring out what the 1% or 2% of your account is. Let's assume that you're working with a $25,000 account. You want to multiply that times 0.01 or 1% and figuring out how much the 2% is just as easily done by multiplying it by 0.02%. In this case, that would be $500. Now that you know what the 1% risk or 2% risks are, you can now move on to step 2. Step 2 is figuring out the stop loss. And the stop loss is basically where the trade is not playing out too well and you want to get out safely without risking too much of your account. So let's assume in this case it's 30 cents. And the stop loss will change. It's not always going to be 30 cents. It could be 40 cents. It could be 10 cents. It depends on the strategy that you're using and what the chart looks like. But for this example, let's go with the 30-cent stop loss. The last step is basically figuring out how many shares you can trade before you lose too much and you risk too much of your account. So this is easily done by dividing the risk by the stop loss. So let's say you only want to risk 1%. What you'll want to do is divide the $250 by the stop loss of 30 cents in this example. That comes out to be 833 shares. But if you wanted to risk 2% of your account, you want to divide the 500 by the stop loss of 30 cents, which will give you double, or 1666 shares. So once you know the number of shares that you can trade in this particular stock that we're using as an example, then you can confidently plan ahead, set your stop loss, and set your profit target. Let's just take a look as an example here, ACER. Just looking at this chart, obviously we know what happened, but if you wanted to play this pattern here and you wanted to jump in on this green candle for confirmation on the break of this pattern, let's say you wanted to jump in at 277, 278. Well, basically you need to figure out your profit target and your stop loss before you jump in. You always want to have a plan. So the plan here is to find a stop loss, in this case a previous support that was formed here earlier on in the day. This is stop loss of 263, and your profit target, which in this case was a previous resistance that had been formed in the pre-market, in this example here with ACER of 297. So basically if you want to jump in at 278, let's go through the steps that we just did. So 278 is your entry. Let's figure out the stop loss at 263. That's a 15-cent stop loss difference from your entry price. So if we go back to our little notepad, ACER example. So your entry is 278. Your stop loss now is 15 cents. So how many shares can you trade with, assuming that you have a $25,000 account? Well, that's very easily done. You want to figure out, let's say you want to trade with 2% risk on this. So you want to divide the $500 that we figured out early on by your stop loss of 15 cents. That should give you 3,333 shares. Now, depending on the stock price, obviously, we may not be able to buy all these shares without $25,000 accounts, but you can always trade less shares. That's fine. You're risking less. That's not a problem at all. But at least you know that you can't trade more than 3,333 shares. Otherwise, you'll risk more than 2% of your account. So regardless of what your risk is and how big your account is, you should always have a plan set in stone before you jump into a trade. And part of that plan is figuring out your risk. How much your account size allows you to risk is very important. Otherwise, you might risk more than you should. Always have a plan before you blow up your account. The second thing is you don't want to change the plan once you jump into the trade. I mean, let's say we jumped here and the trade had not gone our way, and it just happened to hit our stop loss. Well, if halfway through I notice this starts to go down and I move the stop loss down, well, my plan is now changed if I move the stop loss, and that's going to make me risk more than the 2% I had planned on. And the idea here is to be consistent, keep your plan in place so that if you do hit your stop loss, you don't risk too much and you have enough money to trade the next day. Well, that's it. It's that simple. Now you know how to figure out the total number of shares you can trade with your account size. And if you like this video and you want to see more of this type of content, make sure you subscribe or you like and follow us on Instagram. See you next time.